The LPL Financial 2025 Midyear Outlook was just released by the LPL Research team. And guys, this is a must-read if you want to keep your financial game sharp in the second half of the year. Now, this Midyear Outlook is a review of where the markets have been and where they seem to be headed. It is a great guide to help steer personal portfolios. And as an independent wealth manager affiliated with LPL Financial, I use this guide to reevaluate and update my portfolios. Now, if you want a copy, send me an email to bud.milligan@lpl.com or schedule an appointment, and I'll make sure to get this to you. Hi, I'm Bud Milligan, certified financial planner and wealth manager with Milligan Wealth Management. Welcome to another episode of Your Financial Bud. In this episode, we'll take a quick dive into this valuable resource from LPL Financial and hopefully uncover some nuggets that you'll find helpful. So let's get right to it. The first big headline you get in this guide is that as we move deeper into 2025, the delayed impacts of recent trade policies are starting to make themselves felt. We're looking at a little bit slower economic growth, some weakening labor demand, and a slight uptick in inflation. Now, this chart from the Institute of Supply Management, located on page 4 of the Midyear Outlook, shows that the ISM Composite Index fell in recent months. And this indicates a broader slowdown coupled with reaccelerating inflation. The Midyear Outlook also highlights data from the Federal Reserve Board of Labor Statistics, showing historical and forecasted headline personal consumption expenditures, or PCE, relative to the Fed funds rate. The expectation is a modest reacceleration of inflation, driven primarily by modestly growing demand and adverse supply chain dynamics. Also in this section of the Outlook, don't forget to check out the Insights from Washington. This is a great summary of administrative priorities and congressional actions. So, what does all this mean for the Federal Reserve? Well, it puts them in a tricky spot. The Fed needs to stay cautious. Don't expect any dramatic interest rate cuts yet. Every new tariff headline or trade negotiation is going to keep the markets guessing, which adds complexity to the growth and inflation forecasts. The key takeaway? The macro environment is challenging, but diversification across asset classes and geographies can help mitigate risks. Now, let's talk stocks. The major drivers for market performance right now are trade negotiations, the evolution of AI, fluctuations in the interest rate, and the ongoing debate over the tax bill. Despite all this uncertainty, stock valuations are really strong, but there's not a lot of room for big jumps in value. This chart from the Outlook shows forward PE of the S&P 500, the Mag 7, and the S&P 500 without the Mag 7. Now, this gives us an idea of fair value for each of these categories. And you can see that stock valuations are elevated, but not as much when you strip out the mega cap tech stocks. The LPL Research team forecasts a 6 to 7% earnings gain in 2025 to 2026 as price increases and corporate share buybacks help offset the slower economic growth and tariff-related pressure on profit margins. So what can investors expect? Modest gains by the end of the year. Volatility? Absolutely. But remember, these market pullbacks aren't just setbacks. For many, they're also opportunities to consider increasing equity exposure, especially if it fits your strategy. A key number to remember, LPL Research has set a fair value target for the S&P 500 at 6,000 to 6,100 by year's end. And get this, the S&P 500 hit a new all-time high on June 27th of this year as of the printing of this report. And I'm sure by now, as you're watching this, there's probably another one that's come out. So don't forget to check out the sector recommendations at the end of this section on stocks as well. The bottom line, stay diversified and patient using volatility to your advantage when you can. I love how LPL Research team titled the bond section of their Outlook. It's titled The Jekyll and Hyde Bond Market. And the team points out that Treasury yields are under pressure from several directions, kind of like Dr. Jekyll and Mr. Hyde, pulling from several different directions. policy uncertainty, fiscal worries, global currency shifts, and the general trend of yields across the rest of the world are all pulling or opposing forces that are reminiscent of that classic tale. If you're interested in bonds or considering them, keep an eye on economic data, especially labor market numbers. Weakness there could push yields down further, so still expect continued volatility. High-quality bonds remain a great way to help reduce risk in your portfolio, and they could deliver gains during broader market stress. The key takeaway here is that bonds remain a valuable tool for portfolio stability and income generation, but avoid extending duration too far. Now, with ongoing economic and policy uncertainty, diversification may be more important than ever, and it also may mean broadening portfolio diversification beyond that traditional 60-40 portfolio. You may want to consider strategies that enhance portfolio stability. Think equity market neutral approaches, nimble global macro strategies, and various managed futures. Considering private markets, well, you have infrastructure, secondary private equity, and private credit as top ideas, though it's important to temper your total return expectations for now. Niche strategies like volatility arbitrage and cross-asset tail risk can also provide value in this environment. Alternative investments can be complex, and they are not suitable for all investors. Now, while they can help manage risk in a portfolio, they also come with unique risks. Because of their complexity and unique risks, a lot of financial advisors don't even offer them or discuss them with clients. Make sure you understand how they work and the risks involved before you add them to your portfolio mix. The bottom line here is that alternatives can play a key role in navigating volatility and diversifying your portfolio. Now let's talk commodities. They haven't lost their shine. Long-term growth drivers do remain solid, and the growth our global growth outlook and performance of commodities is going to depend on how trade policies evolve in the coming months. China's economic recovery, that's a wild card. Until there's a clear trade deal, a broad-based commodities rally is likely going to stay on hold, but gold still stands out as a bright spot, benefiting from multiple catalysts and making a strong case for precious metals in diversified portfolios. What about currencies? Well, for currencies, we've seen significant fiscal support boosting growth prospects abroad, even as U.S. trade policy stays uncertain. The administration's focus on shrinking the trade deficit could reshape global trade and reduce demand for the U.S. dollar. There are also broader shifts at play. Concerns over America's tech leadership and the fallout from sanctions on foreign assets after the conflict in Ukraine have led some central banks to move away from the dollar as a reserve currency. Now, despite these pressures, the dollar status as the world's reserve currency is not going away anytime soon. So, how should you position your portfolio heading into the second half of 2025? Well, stay diversified, stay nimble, and don't let volatility shake your long-term strategy. Challenges do lie ahead, but with measured expectations and a pragmatic outlook, you can navigate the markets with greater confidence. If you found this breakdown helpful, be sure to like, subscribe, and share it with others. And by subscribing, you'll get the latest videos as they come out each week with more market insights and financial planning tips. And as always, if you have questions about your personal portfolio, reach out to your advisor, or you can reach out to me for a consultation by going to my website at milliganwealth.com, navigating to the calendar icon on the left of your screen, and scheduling a day and time that works for you. I'll also send you a free copy of this LPL Midyear Outlook for 2025. Thanks for watching, and here's to your financial success in 2025 and beyond. Until next week, I'm Bud Milligan, your financial bud.